Telecom stocks like Verizon and AT&T have been struggling, reaching lows they haven't seen in over 10 years. Both stocks down over 20% in the last year, and AT&T hasn't been at its current level since 2003. Joining us now is Walter Piecyk, LightShed Partners analyst. It almost reminds me of overall media, Walter. It's like, oh man, cord cutting. We got to get into streaming. It's like, oh my God, streaming. We gotta get it. And the wireless guys. Oh wow, we got to get into wireless. Yeah, that's where it is. Yeah, Verizon's safe. It's a defensive stock. What can happen? Now we know things can happen. I thought 5G was going to save us.
There's a lot of similarities, Joe. I mean, the wireless subgrowth at Verizon, for example, which is, has been the kind of the bellwether of the group, which has slowed down, has investors freaking out. But meanwhile, they slipped in a price increase in the last couple of months. They're getting a little bit of churn there, but they have 100 million customers. And that price increase is going to add billions of revenue. So when you look at the revenue growth, they're actually, this is how they're going to grow. They're going to increase price. They haven't been able to come up with 5G services, as you talked about. Now they're going after the broadband guys. Your parent company actually, I think, is now Comcast is running a commercial now, effectively addressing the fact that they're losing some customers to wireless broadband. So there's some small pockets of growth that they're going for, but really the underlying theme here for these guys is increased price.
Why? Is it an economic, macroeconomic phenomenon, or we're just tapped out, Walter?
Tapped out. I mean, everyone's got a smartphone, right? So they did try for a time to say, hey, I'm going to throw in your Netflix account or your Disney Plus account to get you to a higher rate plan. And they were just eating that cost. So that was showing higher revenue growth. But as we saw with Disney and others, there's only so many subscribers out there that were caring about some of these services. 5G hasn't materialized as I think, you profiled some of these services that we were promised, automated cars, doing surgery from far away. I mean, these things may come over time, but they're not delivering the revenue growth that a lot of investors want today. So look, they just increased price. And now you've got, this inflationary environment. So they've got cover. So when they increase your bill, there's, it's inflation, but obviously it's an opportunity for them to increase revenue. Yeah.
Be nice if the doctor was around, when they're putting you under. Say, oh yeah, he's in Cleveland, but he's a heck of a surgeon. I don't know about that. Walter. So AT&T, for a while, I could see the idea of owning all those great assets that Discovery now has, and AT&T still obviously has an interest in how that goes out. Was that the right move? Now, are we questioning that? It looked like John Stankey was a genius for dodging that bullet just in time, but was that out of the frying pan into the fire? Now he's stuck with the same problem Verizon had.
I mean, even do you start off talking about the media stocks? Even if these media stocks were performing well, I think there would have still been some criticism about some of the media acquisitions that AT&T and Verizon both made. So now they've gotten rid of those, right? And you're right, the timing, whether it was coincidental or prescient by Stankey, has been good, right? I mean, these media stocks are not something that these companies would want to own. But at the end of the day, we still get these questions of is AT&T going to cut the dividend? Is Verizon going to cut the dividend? I mean, the stocks have pulled back largely because of the rate environment, right? These are dividend stocks. So, when the 10-year goes from X to Y, there's obviously some impact on AT&T and Verizon. They've got plenty of free cash flow. And this 5G that the industry has been talking about for a couple of years is about to end its capital cycle. So they'll have even more money to pay these dividends. So to the extent that you talk about safety stocks, the biggest challenger in the market is T-Mobile. And the CEO of that company was at a conference within a week or two ago saying, I'm not going to burn the house down. I mean, that's him messaging that they're not going to go out and be aggressive on price. So you still have some relative safety in terms of the pricing environment. Churn is at record or near record lows for this industry. Really, the only thing that can disrupt it at this point is if the cable operators who are hurting from wireless broadband get more aggressive at going after wireless subs, or Dish. Dish is still kind of looming out there. No one thinks that they can execute. Maybe they come in with a very low rate plan that disrupts the market.